We're just a few seconds away from some new manufacturing data from the Philadelphia Fed. The futures ahead of that are higher this morning. Dow futures up by 100, but off the highs of the session. Let's get over to Rick Santelli. He's standing by at the CME in Chicago. Rick?
Yes. You know, one of the few numbers that are being released, of course, this comes from the Federal Reserve System, so it's still operating. Philly Fed Business Outlook. This is an October number, so it's pretty fresh. We're expecting a number right around 10. Comes in on the light side, minus 12.8. Minus 12.8 would be the weakest going back to April when we were down near minus 20. It hasn't been a good run. Every month this year, of course, has been negative. So we know that the business outlook in Philly and many other regions, especially on manufacturing, has been on the soft side. Everybody knows that we were supposed to get a litany of numbers yesterday and today, and I thought very quickly I would go back and at least refresh our memory on where we have been and what we have missed. You know, our last look on CPI was definitely a bit on the warm side, up 0.4 on headline, up 0.3 ex food and energy, up 2.9 year over year, up 3.1 when you went year over year on core. It was a different story for our last look on PPI for August. They were minus numbers on the month over month. Minus 0.1 on final demand, minus 0.1 on minus food and energy. And finally, it was up 0.3 when it was on minus food, energy, and trade. The year-over-year numbers had moderated quite nicely. 2.6 on final demand, 2.8 on both ex-food and ex-food, energy, and trade. So my point is we had a warmer CPI. We saw a cooling PPI. So there's still questions on the lingering presence in terms of inflation. Retail sales was supposed to be out as well, and that has been running strong. The last 3 months we had on retail sales were August up 0.6, July up 0.6, and June was up 1%. If you looked at core retail sales, the last 3 months reverse order, we're up 0.7, up 0.5, up 0.9. So we had solid retail sales. Obviously, we're trying to put different pieces together. Steve Leisman and many economists throughout the country and analysts have been trying to piece together from a variety of sources. But at the end of the day, it really is tough, and it's going to be even tougher for the Federal Reserve. We all heard Chairman Powell talk recently, and his comment was that, you know, the risks are tough here. Inflation definitely is sticky, but maybe the labor market slowdown is more important to deal with. And in that endeavor, we were supposed to get initial and continuing claims, and I have to say, I know we have seen some deterioration in JOLTS and some other macro data. But if all you were looking at was initial jobless claims, it was very difficult of late to pick out any problems within that data series. Back to you.